Hey guys, welcome to another YouTube video on this YouTube channel. Today we're going to be talking about bias. Before we go, before we continue the video, I want to say thank you to everyone who's been supporting this channel. Your likes, your comments, your reviews have been amazing, and I'm super happy to be your host. We're going to be talking about bias today, and bias simply answers the question of direction. And this is crucial because before you engage with the market, you want to know which direction the market is headed towards. Is it bullish? Is it bearish? Or is it consolidating? And these are the questions you need to answer before you engage with the market. Now, to understand bias, you need to understand there are two forms of bias. You are either trading the reversal bias or a continuation bias. And the reversal simply means you're trading against the resisting trend. So in this case, we have price trend low, and you could see the candle two sweeps the low of candle one and reverses. By the way, before I continue, I want you to understand that to clearly understand bias, you need to understand liquidity. And liquidity simply and there are two forms of liquidities, right? You're either interacting with the liquidities at high or lows, or interacting with liquidities in gaps, right? So you need to understand this fundamental truth before you understand seeking for bias. All right. So in the reversal form of bias, you're basically saying that the market has exhausted the pre-existing trend, and you want to trade against the already existing trend. Okay. To do this, you need to look for key signatures in the market that aligns with the reversal bias. And one of the strongest signature you want to see is this sort of signature, where this is a daily profile, right? So the daily candle one trends low, closes bearish, and candle two sweeps the low of candle one, closes above it to frame a candle two closure. And you're basically looking for candle three to expand higher, to do what? To take out buy side liquidities resting above these highs. And the second form of bias is the continuation bias. In this case, you're basically trading in line with the trend. As the name continuation simply means, it means continuing the trend. All right. So if the market is bullish, you want to align yourself with bullish moves. If the market is bearish, you want to align yourself with bearish move. In this case, you're going to be utilizing gaps, right? You're going to be utilizing gaps in the intermediate time frames to align yourself with the already existing trend. Personally, I use the daily time frame for my bias, the 1 hour time frame as my intermediate time frame for context, and the 5 minutes or 3 minutes for execution. And this keeps me consistent in my approach and makes me deliver mechanically, right? And this has improved my trading significantly. So I advise you do the same. Okay. So if we're looking for a reversal signature, right? If you're looking to trade in line with the reversal, right? On the 1 hour time frame, we want to see a structure like this, where this signifies the bearish trend already, and then we have price put in similar structure as we have in the daily time frame on the 1 hour time frame, where we see candle one, hourly candle one opens trend low, candle two sweeps the low of candle one, closes above it, right? And then we see candle three expand, candle four expand, candle five expand to take out resting liquidities above these highs. Okay, and then we have the hourly profile for a continuation, and this is simply saying that if we are looking for a continuation of the trend, so we have daily candle open, trade low, candle two closes below the low of candle one, closes significantly below the low of candle one, framing a bias that we are likely going to be expanding lower on the candle three on the next day, right? This is exactly the kind of structure you want to see, not perfectly this way because the market put up a lot of signatures, right? But you want to be utilizing gaps, right? Or key relevant key highs or lows to get yourself in line with the already existing trend. Okay, so in this case, we're using gaps. Candle one opens, candle two trades into that gap, interacts with it and respect it by closing below. And then we have candle three expand lower to continue the trend and take out resting sell side liquidities, resting below any low, right? So to understand this perfectly, I'm going to go into the chart to show you examples and bring this lesson to a more technical and understandable form. Our first example is going to be we investigating the price action on Monday 29th of June 2026. And we begin from the higher time frame, which is a daily time frame for buyers. So let's take this backward. Already we know that the established trend has been bearish. And then on Friday, 26th of June 2026, price trade lower, swept the liquidities resting below the lows of Thursday and Wednesday and closed above it to frame a candle two closure. And if we are correct, we want to see price, take out the resting liquidities above these highs and at these highs. Now, the question is, how are we going to approach the next day? We drop down to the 1 hour time frame for context. So this is the liquidity price swept, and we are basically looking at our draw on liquidity now is these highs and subsequently these highs as well. So we drop down to the 1 hour time frame. All right, this is the first high we are looking at. Then this is the absolute high we are looking at. Let's see what price did. So personally, I'm a New York trader, so I want to see the same reversal signature I saw on the daily time frame on the 1 hour time frame during the New York session, and that means I'm going to be waiting until 6 o'clock for the New York session to begin. And here, 6 o'clock, 7 o'clock prints this candle, 8 o'clock prints this. You might be wondering, is it not a candle two closure? I wouldn't trust this, to be honest. Why would I trust this? It's happening at a high, and there is no form of key level this market is interacting with for me. So we wait. Then we have this 9 o'clock putting up this trading lower, but this is not what we're looking for. We're looking for a candle two closure in line with the trend. And here we have it, 10 o'clock. We have it. Price comes, sweeps these liquidities, resting below this low. And this was an SMT also with YM. This was an SMT with YM, so you can go to your chart and investigate. So if we are going to be trading higher, right, we want to see price respect the 50% of this week. Okay. And as and what is our draw on liquidity? Remember, our draw on liquidity is at these highs and at these highs. Let's see what the market does. You can see our first target is met already by 12 p.m. And then let's see how it goes. Now, this is the open of a new day, right? This is the open of a new day. Judging by the closure of this day, judging by the closure of this day, where we had a complete bullish closure above the highs of the previous day, we can frame a continuation, right? A continuation to these highs and probably to these highs as well. Okay, to do this, we want to see price respect 50% of of this this candle. Okay, and let's see if we get that at at the open of the new day. Okay, now we're in the New York section, or before this printed, we're on the New York section. And what do we want to see? First, price is respecting 50% of the previous day's range. That is one of the first good things you want to see. Second, we want to wait for a candle two closure, right? And this was the candle two closure we got. right? And then it happened in the New York time frame, in the New York session, right? New York starts from 6 a.m. for me, and this happened around 9 a.m. And we could see the price expanded higher to take out the resting liquidities above this high. The main thing I want you to understand is when we're trading continuations, we want to see price respect 50%, trade above 50% of the previous day's range, right? And we also want to see the same signature, right? The same kind of signature, a candle two closure. This was a candle two expansion closure, right? And there are ways to trade this candle two expansion closure, okay? And as you can see, price expanded higher all throughout the day and we closed bullish. Okay, so if I take this back to the daily closure and go to the daily time frame to show you what it looked like on the daily time frame, you would see that we had a a beautiful closure here, right? So this is candle 2, candle 3, and the continuation candle 4. So here is an example of a bearish reversal form of bias. And what do we have here? We have Monday interacting with this relevant key low, key high, sorry, and price closed below the previous day's high as well to frame a candle 2 closure. And what do we want to see? We want to see candle 3 expand to take out first this liquidity resting below this low and all these sell side liquidities resting below these lows. Okay, and I will drop down to the hourly time frame for context. Remember, your bias is irrelevant without a context. And what do we want to see? We want to see price respect 50% of this week. So we don't want to see price expand above 50% of this week. Right? There are conditions where price expand above 50% of the week, and there are other confirmations we could use to be aligned with the trend. But I'm not going to be talking about that in this video, right? Let's drop down to the 1 hour time frame for that. So here, what can we see? We can mark out this gap as a potential key level price could actually reverse from. And then remember our draw liquidities is on this low. So if we're going to expand lower, we don't want to see price expand above 50% of this gap. Let's play our price. We'll see price interacts with this gap and respect it significantly. Probably this is going to be the high of the day. Let's see how price plays out. And yep, we had a crazy overnight expansion. As a New York trader, when you see a signature like this in the day, it's best you stay out because you are likely going to be interacting with a consolidation market during the New York. Okay, there are protocols to trade in this set of sections, but genuinely you don't want to be in this market, especially if you're a new trader. I would advise against you trading in this sort of conditions. So what do we have? We have 8 o'clock. Would you call this a candle two closure? I wouldn't call this a candle two closure actually. So what do we have? Price expands high. And you might be asking, why didn't you call this a candle two closure? I'll reserve that answer strictly to my mentorship students. So you could see already that on this day, price opens, forms this shallow wick, expands low to take out all the resting liquidities below these lows. And this is exactly the kind of signature you want to see. This is exactly how we predict or we frame a reversal bias. So I'm going to give you one more example for a continuation bearish form of bias, and we call it a day. All right, we're going to be investigating this price action for a continuation form of bearish bias. All right, so we have candle 2 on Tuesday, 3rd of February 2026, sweeping the liquidities resting above this high and expanding lower, closing above the close of the previous candle. And with this, we can look forward to price taking out this sell side liquidity is resting below this low. So now we want to see price take out this sell side liquidity is resting below this relatively equal lows. And to do this, what do we want to see? We want to see price respect 50% of this candle's range. All right. Now let's drop down to the 1 hour time frame for context. On this 1 hour time frame, you could see this gap, which could be used as a key level to send price lower, right? And we also have this gap as well. But this gap is resting above 50% of this of the previous candle's range, and we don't want to see price do that, right? So let's see how price interacts. So we have 18 o'clock open of the previous of the new day, and let's see how we interact. Now we've expanded above this gap, so it's irrelevant to us now. And let's see how we keep moving. Okay, so this is New York. New York opens 7 o'clock, sweeps this candle one, candle two sweeps candle one's high inside this gap, right? So we have this gap where price is actually interacting from, and also we have this other block price is also interacting from as well. All right, and as soon as price closes below candle one, we have candle two, candle three expansion, candle four, and we saw price take out our draw liquidity at 10 a.m. This is actually the kind of signature you want to see when you're interacting with a continuation framework. So let's go over this example again. We have price sweep the buy side liquidities resting above this high on the previous day. This day closes significantly bearish below the open of the previous day. So we are looking to frame a continuation bias on the next day. On the 1 hour time frame, we had price, you know, create this high at 2 o'clock, the high of the day, and then we had price during New York session frame a candle one here, candle two open sweeps the liquidity is resting above this highs, closes bearish to frame a C2 closure, which is exactly the same kind of signature you have on the daily as well. Okay, and when that happens, you're looking forward to get yourself in line with price expanding towards your draw on liquidity, right? So the same rule applies to for this to be true. You don't want to see price trade above 50% of this candle as well. So that's just basically the same mechanical approach you apply on each time frame, and then we see price expand low to take out liquidity is right below these lows. So that's it for this video. I hope this video was insightful. I hope you learned a lot from this video. I'm committed to putting out beautiful content like this. So if you've not subscribed to my channel, please subscribe to my channel. My mentorship is currently ongoing. We had an amazing time on Saturday. And if you want to be part of it, you can send me a DM today. My Telegram link is on my profile and on the description below as well. So you can send me a message on Telegram and get yourself enrolled to the mentorship. Thank you for watching this video.